You are watching Market Watch, the brief overview of the key events from the world of finance. Last week, Neil Kashkari, president of the Federal Reserve Bank of Minnesota, suggested that the Fed might not cut interest rates at all this year. And then on Friday, a report on the U.S. labor market was published, which greatly surprised investors. The unemployment rate fell to 3.8%, and the number of jobs created in the non-agricultural sector exceeded 300,000, which is significantly higher than the average for more than 2 years. All this reduces the likelihood of a slowdown in inflation and, as a result, calls into question the Fed's willingness to lower the key rate. Another strong bearish fundamental factor for the stock market is the rise in oil prices. Last week, on Friday, the quotes of the American grade of WTI oil reached the maximum level since the end of October 2023. This became possible against the background of the worsening conflict in the Middle East. Also, the decrease in production opportunities in Russia contributes to the growth of oil prices. After all, at the moment we are not talking about the prospect of a decrease in demand, while supply may significantly decrease. Given the fact that the U.S. labor market remains very strong, the Fed will not start lowering the rate until there are obvious problems. While the rapid rise in oil prices significantly increases the cost of goods and services, thereby reducing the likelihood of slowing inflation. All this significantly increases the risk of significant economic problems, for example in the form of high-profile bankruptcies, which in turn can provoke a strong wave of sales on the stock market. At the moment, there is no panic, and most likely it will not be until the moment of force majeure. In conclusion, let's talk about the cryptocurrency market, which also demonstrates nervousness, especially when talking about altcoins. However, the dynamics of Bitcoin trading is more like uncertainty. The fact is that after a strong wave of growth, consolidation occurs. This is an absolutely natural reaction of the market. The only question is what will happen first, a crisis situation that will collapse the market or an additional reason for mass purchases? This largely depends on the situation on the stock market. Stability will contribute to the influx of Bitcoin ETFs, which in turn will lead to an increase in the value of the main cryptocurrency. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.